Hello, I'm Lelde Smits for Modern Wall Street, and joining me here on the floor of the New York Stock Exchange is Stephen Guilfoyle. Stephen, wonderful to have you here again.
So nice to be here, thank you.
Now, in the past week, we have, of course, had the devastating Paris attacks last week, and what I really would be interested in knowing is how have the markets responded to the terrorism that occurred in Europe last week?
Well, they've actually responded very well. You can't say anything's fortunate about a terrorist attack, but the attack came on a Friday night. It gave the markets 2 days to think about it, 2 days to recover. It gave the French military time to respond before the markets opened. And by the time the markets opened, if you look on a chart, you really can't tell where there was a terrorist attack. You can't say, oh, there it is, because the markets absorbed the news rather well, and we've actually had a good week here on Wall Street.
Okay, and in terms of terrorism and conflict more generally, what do you usually expect to see on the markets here at the New York Stock Exchange as well in times of conflict or heightened terrorism awareness?
Well, the benefactors usually the defense stocks, defense contractors, those kind of names usually do well in this sort of thing.
And could you list some for us?
The General Dynamics, the Raytheons, those kind of companies, the companies that do business with the military, basically. I expected to see something of a pop in oil maybe on Monday, which we did not get, being there was intensive bombing going on in the Middle East. But maybe that's why oil's been able to hang on to that $40 support level. Maybe that's why it hasn't really come in as hard this week as you might have thought, because I really thought it was going to $38. So maybe I was wrong about that, or maybe this is a little bit of false support, because there is a large short position in oil at $40 right now. So if that breaks, you are going to see movement.
Okay, now in light of these attacks that did occur in Paris, terrorism does not seem to be going anywhere. If anything, it's just becoming an increasing problem for the world. How does this change, or does it change your outlook for markets over the coming months?
Well, if there were to be a major attack, a disruptive attack that disrupts economies, that disrupts markets, of course, you can't really prepare for that. That's an outlier, and it will leave a mark on your portfolio. Not that you should be thinking about your portfolio in times like that, but I guess you have to, because you have to protect the ones you love. You have to protect your businesses. So that is a situation. Maybe you want to get more defensive, go into stocks that pay a dividend, stocks that don't quite have as high a beta, because those high beta names are going to be the ones that move the most in times like that. But I don't know if you really want to go into a protective shell like that, because you're going to miss out on what the market does over that time frame if you do.
Okay, well, thank you so much for those insights there. To finish on a positive note, we do have Thanksgiving coming up next Thursday. Just quickly, what should we be watching out for before the turkey comes?
Oh, we do have the GDP next week, and next Wednesday, and this is a big one, the PCE. We just had the CPI. It showed a 1.9% gain year over year, which is just short of the Fed's target. The Fed looks like they're on track to possibly raise rates. The PCE is a big part of the formula.
Thank you, Stephen Guilfoyle, and I do hope you have a wonderful Thanksgiving.
Same to you, Lelde.